Hello, my name is Al Parker. I'm Executive Vice President of a company called myEcon, which is a company that educates families on wealth generating strategies. I want to welcome you to this training video on how to fill out your W-4 form using the IRS W-4 calculator. I'm about to share with you some information that others who have seen that have seen this before have been amazed by what they have learned. I believe it will be the same for you. So let's just jump into this. And while I'm doing that, I'm going to be sharing with you some recent articles pertaining to your tax withholdings and refunds for this year with the new tax code changes. So with that, I hope you don't mind. I'm going to share my screen with you. And in doing so, I'm going to find some articles to actually be able to show you exactly what I'm talking about. Now, this is an article here. It says counting on a tax refund next year. Double check your withholdings now. It's actually telling you that. Here's our article, number one, saying double check your withholdings right now. And what it says in this article is that every tax season, a lot of people feel that they've hit the lottery, except they're collecting their own money. Millions of Americans calculate their withholdings so that they get money back at tax time. They know their employer is sending too much money to Uncle Sam and they like it that way. They don't trust themselves to save. They count on the tax refund for any number of things, such as paying off debt or taking a vacation. Let me say that again. They count on that tax refund for any number of changes, such as paying off debt or taking a vacation. That might be something that you look at doing also with your refund. But Congress passed major tax legislation at the end of last year that could affect your refund if you're one of those folks, according to the recent report by the Government Accountability Office, that's GAO. For the 2018 tax season from January to May, the IRS issued more than 102 million refunds, totaling $284.9 billion. The average refund was $2,778. Now, that's interesting, but let's look at further on down here, and it says that review your W-4 employees withholding allowance certificate. As a wage earner, you're required to pay federal income tax by having it withheld from your pay throughout the year. The amount is based upon the number of allowances you claim on your W-4. And it also says, the last sentence, if your tax situation changes, that is, you get married, have a child, or purchase a home, you fill out a new W-4. And then it says here that you can calculate the right number of allowances by utilizing the worksheet on the W-4, or you can go to the IRS.gov and search for withholding calculator. We're going to ask you to do that. Before we do that, what I'd like to do is go to another article here. And this article just talks about, here's the average tax refund that people get in every state. But what I like to do is just go to a little bit of information here. And it says that according to IRS, in the fiscal year 2016, the average individual income tax refund was $3,250. Now, the point I'm trying to make here is $3,050 is about $250 a month. And for a lot of people, extra $250 a month coming in would do a lot. But again, this is just showing what the numbers say for 2016. And then going further down, it says, if you're one of the millions expecting a tax refund, consider using it to improve your financial situation, whether that means tackling debt, funding your retirement accounts, or chipping away at your rent or mortgage. So again, it's giving you some advice as to what you should be doing with your tax refund. And again, a lot of you probably do that, but the thing is, how are you able to do it sooner rather than later? So with that, what we're going to do, I'm going to show you how you're able to actually do that and find it. So what you would want to do is just go to the Google site, and what you want to do is put in W-4, and automatically on the top you see W-4 tax calculator for 2018. When you go there, you're going to see on the top 2018 withholding calculator, IRS.gov. And the reason I recommend this one over any others is that information that you're getting is actually coming from the IRS. This is a free tool that is available for the entire public to use. And a lot of people are not aware of it or even how to use it. But we're going to actually be going over that. But before we do that, what I like to do is let's use an example so that we'll know, because everybody's situation is different. And I just want to use an example here, and then we'll discuss some things as we go along. But here in this example, we're using a married couple that makes $100,000 total income. The husband makes $45,000, the wife makes $55,000. They have 2 children. Child care was $4,800 for the child. The husband, now this is information that you need to get off of your last paycheck stub. In this example, this couple's, we used this couple's August 11th paycheck stub and got this information off of their paycheck stub. So for the husband, his federal tax withholding year-to-date was $2,895. For the wife, it was $3,525. And also on the paycheck stub, it shows that he paid $193 every pay, and she paid $235 every pay, and they got paid every 2 weeks. So what we're going to do is use that information and put it in the W-4 calculator and see what we come up with. And it says here, what is their filing status? This is your various filing statuses: single, married, filing joint, filing separate, head of household, and qualifying widower. If you can see, head of household is underlined and it's a different color. You can actually go there and see what the qualifications are for head of household. That's very important to know, because each one of these designations here, filing statuses, have some different numbers that go with it. So it's very important that you understand your filing status, because it can affect the amount of taxes that you pay out of your paycheck stub. In this example here, we're looking at a married filing joint return, a married couple filing joint return. No one else can claim them, so we hit no, and we hit continue. And then general information here is asking the total number of jobs that you and your spouse are currently or will be employed. In this example is 2. The next line is checkbox if you or your spouse had a job this year but no longer employed in that job. That's not the case. But if that was the case with anyone, you would click that. Let's just say you start a job in January and you transition to a new job maybe in May. Well, to be able to determine the right amount of tax withholding, you need the last paycheck stub from your previous job, as well as the paycheck stub for your current job, to be able to provide the right information. And when you put that in there, it will provide you some questions to be able to determine how much federal income tax you paid in the previous job. But in this example, this couple has worked their jobs from January to December, so that does not apply. This couple did not contribute to a tax-deferred retirement plan such as a 401k this year. They did not. They did not contribute to a cafeteria or pre-tax plan such as health insurance. They did not. The husband and wife did not receive a scholarship or fellowship grant this year that must be included in their gross income. They did not. They had 2 children, so we put that here. They're not 65 or older, and they're not blind. Now let's go to child and dependent care credit. There's 2 children, which we discussed previously in the example, and we said also they contributed $4,800, so they know that's what they're going to be contributing for the year for child and dependent care. And then they have, for child tax credit, they get 2 for the 2 children. And note, the calculator will also determine non-child dependent credit for you based upon your total number of dependents, and this is the number of qualifying children. So the calculator will do some internal behind-the-scenes calculating to determine the qualifying children, the number. And then earned income tax credit, this also underlined is so that you can understand what that means, the definition of that. But in this example, we're putting 2. And again, if the calculator feels that's not correct, it will not count this information. There are no other credits, so tax credits, you can click on that to see what that means. In this example, the couple did not have any tax credit. So we hit continue. Now this is information that comes from the paycheck stub so far as wage, income, and withholding. And we're going to enter 0 for any amount that does not apply to this couple. So the first question, the first line here is, enter the gross wages, salaries, and tips you expect to receive in 2018. For the husband, that was $45,000. For the wife, that was $55,000. They did not receive any bonuses, so we put 0 there. Now, it's asking here, enter the total federal income tax withheld to date in 2018, including amounts withheld from bonuses or which you expect to have withheld for bonuses. They did not. So we said before that the husband received he's paid $2,895 so far, year to date. Again, it was on the paycheck stub, and the wife paid out $3,525 year to date, based upon information on their paycheck stub. The husband is having $193 taken out every payday, and the wife is $235. And then how frequently do you get paid? And again, you have 4 choices. In this case, this couple is getting paid every 2 weeks. They plan to have their jobs to the end of the year. They don't have any non-wage income, and they have not had any adjustments to their income. There's nothing there. So we just hit continue. Now, one of the changes in the tax codes is that the itemized standard deductions for all of the classifications have changed. For a married couple, the standard deduction the previous years was $12,600. They have increased that to $24,000. In the past, the $12,600, normally people were able to use the items listed here to come up with more than $12,000 worth of itemized deductions. So that's why a lot of families had itemized deductions. Because it's been raised to $24,000, a lot of families are not going to be able to claim itemized deductions. What you'll be doing is just using the standard deduction. And for most people, that's more. So we're going to use that. And this gives us a summary based upon the information that was previously entered. So it says here, based upon the information you previously entered, your anticipated income tax for 2018 is $3,782. If you do not change your current withholding arrangement, you will have $9,844 withheld for 2018, resulting in an overpayment of $6,062 when you file your return. If you want your withholding to more closely match your anticipated tax, adjust your withholding on the new W-4 form as follows. For the husband, he should have 9 allowances. For the wife, she should have 11 allowances, and they should check the married box on the W-4 form. And again, you can click out, just click on that, and it will actually print out a W-4 form, and it will show you a W-4 form, and you can print that out and actually be able to turn it into your HR department. Now, for this couple, here's the key. If they turn this in, then their next paycheck, they're going to see a significant change, really a decrease in the amount of federal income tax that's going to be taken out of their paycheck. So they will actually be giving themselves a pay raise on their next paycheck and throughout the remainder of the year. But let's look further here. Based on the information that they entered, if you file a new W-4 form for the rest of the year, the expected refund to which you may be entitled will still be $2,650. So they are still going to get a refund. They're going to get an increase, the immediate increase in their next paycheck on their income, take-home pay, and they're still going to get a refund. That's amazing to be able to do that, but that's what this calculator will do. Now, the thing here is that this tan area is the information that was put in. My recommendation is that you save this information, print it out, establish a folder so that you will have it to be able to make sure that you know what you put in, and you can always go back and change it. So you can do this as many number of times as you want. But again, that's very, very helpful information to be able to do this, because again, it allows you to be able to have records of what you have done. Now, let's look at this. I want to address this in 2 different ways. What if this couple right here, because they did not contribute in their 401k, what if they took that money, $6,000, and split it in half, $3,000 for her, $3,000 for him, and they put it in their 401ks, And again, putting in the 401ks, that money will be invested so that they'll have it at retirement. But what if their companies also had a matching, in this example, $3,000 for each couple? So if this couple did a total of $6,000, that means their companies would match that $6,000 that will go into their 401k. That's 100% return on your investment. You can't get a better situation than that so far as 100% return on the money that you're investing. Plus, that money is going to be invested again by the company, so that money is going to grow even more. Another thing that could be done is, what if this couple decided to use that money for saving it for some reason or paying off debt? That's very vital. So the thing is that there's various options that you will have, and you can put that information in there. Let's look at another option. What I'd like to do is, what if you're able to look at a home-based business of some sort? It could be anything, but what if Uncle Sam will pay you to run a home-based business? This gentleman, Ron Mueller, is the author of this brochure. He's also the author of a bestseller book, Home Business Tax Savings Made Easy. And in there, he talks about hiring your own children in your business to earn tax-free income. Now, that's great, but did you know that for this current tax year, that each child, you can do that and be able to deduct up to $12,000 for every child? So with this example that I just used, which had 2 children, they have $24,000, $12,000 for each child, 24 total, that if they learned, again, you have to learn this. This is not tax evasion. This is just utilizing what's already there to minimize your tax liability. So that would be $24,000 that this couple could utilize to reduce their tax liability. And again, they've already increased decreased their withholding, where they are getting more money back. But what if they got an additional refund that equals to what they were going to get anyway? That's what you call leveraging and managing your income. So I just wanted to go over that. But let's look at one more thing before I move on. And I just want to drive home this point, because this is very, very vital information here. What I want to do is talk about withholding, and over a period of time, what does that actually mean? So what I'm going to do when my computer decides to help me out here is I'm going to show you a slide here. Okay, let's look at adjustment versus a refund. So this is really saying adjust your W-4, or just don't adjust it and just get a refund. So let's look at that, and let's look at $500 a month, which is equal to $6,000 a year, which we mentioned in this example. So the person is just looking at saving that money over 15 years. You're looking at $90,000. If a person's able to do that in 15 years, that's good. But if a person educates themselves on the various options so far as investing your money. I do not sell, and I'm not licensed to sell investment products. That is not my purpose. I'm just trying to show you a number. I'm trying to show you the numbers. So at 8%, you're looking at $173,000. If you're using your tax refund for savings or paying off debt, would an extra $83,000 help towards paying off that debt? As a matter of fact, $83,000 would pay off a lot of debt, just that alone, and you still have $90,000 left over. But let's go a little bit further. Let's just say we take that same amount of money, $500, and which is $500 a month, $6,000 a year, and we did that over 30 years. You're looking at $180,000, okay, that you saved up over 30 years. And for some people, that's great. You have that amount of money saved up, but that's with not adjusting your W-4. But what if you did learn how to do that at $500 a month for 30 years at 8%? Now you're looking at $745,000. Now, that's significant, because that's just taking the money and saving it and having that amount of money. But I would think that the 745 will be much greater than the 180. Now, again, we're talking about your money, not mine. But I'm just wondering, would $745,000 take care of any type of debt that you might have? Would it be able to pay off a house and you still have money in the bank? And so there's a lot of things that could be done as a result of that. But I'm just trying to show the importance of a couple of things. And let me come out of this. And so what I'm trying, the point I'm trying to make is this. The thing is that when we were talking about some of the options that are available, and we're talking about a home-based business, some of the things that you're actually able to utilize is car and truck, the mileage there, your cell phone, your internet, traveling, and wages. I mentioned that before. These are some things that can minimize your taxes. Debt elimination, we talked about in that example. What if you could take that money and utilize it for debt elimination? But here's the factor is that what happens after that debt is paid off, okay? And you have freed up, like here, freed up so much money a month. Then the next step is, what type of investment education are you getting? Are you getting comprehensive training? Are you getting understanding of this to the various terminology of the various investments that are out there? Are you learning the concepts behind it and the strategies behind it? So that's the point that I'm trying to make there, is that people should be looking at the total picture, and I'm just trying to address that, give you something to think about. Now, we talked about retirement. Let's discuss that for a few minutes here. We're going to talk about, this is another article, it says people retire early for two reasons, and neither one of them is money. Now that's very interesting. And it says here, early retirement isn't about how wealthy you are, says several early retirees. For many early retirees, the value of life during retirement is priceless. It says here, the happiness it brings doesn't depend upon the dollar. Instead, early retirement is about two things: time and lifestyle. Now, let's move on. When it comes to early retirement, there's no discounting the importance of having enough money saved to retire early. But many early retirees will tell you the truth. Money doesn't really matter once you get there. Brandon, let's look at Brandon. Brandon of the blog Mad Scientist, who retired at the age of 34. Yes, 34. Previously told Business Insider that he wishes he knew how unimportant and insignificant money would be after retiring early. He said, I always thought that I would spend my entire retirement doing entrepreneurial things, but now that I have enough money, I've had to find new sources of motivation. Now, that's very interesting, because he says that money is so unimportant to early retirees that in hindsight, many said they wish they didn't wait so long to retire early, even if they didn't have as much money saved as they would have liked. For them, you can't put a price on the value of early retirement. Consider John from ESI Money. After a few calculations, he realized that retiring at 52 instead of the official retirement age of 65, he gave up $3.1 million in earnings. But to him, it was the best $3.1 million he ever spent for several reasons. It wouldn't have changed his lifestyle. He probably added a few years to his life by escaping the stress of work. And he found early retirement way more enjoyable than working. He says here, imagine 13 years of life enjoyment in retirement versus 13 years if I remain working, especially in the last 13 years of my career, he says. What is life? He says here, what is that life enjoyment worth? The enjoyment John speaks of doesn't depend upon a dollar, but instead of two other factors, time and lifestyle. Let's look at another early retiree, Grant Sabatier, who retired at the age of 30 with $1.25 million and runs the blog Millennial Money, has said financial independence has always been about time, not money. If you view money as the goal, then you missed the point, he wrote in a post published in the Business Insider. Money is infinite, but time is not. He says that to him, early retirement simply meant having enough money so that He didn't have to worry about money and could finally follow his passions and find new passions. In addition to time and early retirement, is also about your lifestyle, according to the blogger Mr. Crazy Kicks, who retired at the age of 34. That's interesting. We have all these people who are retiring in their 30s. In fact, he says an early retirement lifestyle is something you should develop while preparing to retire early. Instead of living in a cardboard box eating ramen noodles to save money, one should pursue financial independence by honing a lifestyle that is based upon living well for less. He wrote in the post previously published on the Business Insider, the goal is to continuously cut excess spending while building your own early retirement lifestyle that doesn't depend upon tons of cash for happiness. The key, he says, is maximizing happiness per dollar. Put your money where your heart is, but get the most bang for your buck. As Secretary puts it, money only matters if it helps you live a life you love. Now, I thought this article, I don't know about you, but I hope it kind of hits the button with you, because this article brings the whole idea of what everybody is planning for. And what are they planning for? Most people are preparing for two things in life. Number one is their current lifestyle, and number two is their future lifestyle. This article just paints a picture of what it's like to be retired and financially secure. Just reading what it's like from those who have accomplished it just adds some reality and motivation behind what everybody does every day for a living. And for most people, it's a job. It also shows you that retirement is not about age, it's about money or financial security. But the other key factor is understanding time and how important that is. So I just wanted to share that information with you. But I also want to wrap up and say here that, in summary, I've shown you various ways to manage your tax withholdings and benefits over a period of time. These are some of the strategies that families or individuals get to learn with our personal financial success education program. So with that, I just want to make a couple of announcements. My first announcement is that for some of you who wish to use the W-4 calculator and find that you might want some assistance, I'm going to offer that service to you free of charge. All you need to do is text me at this number, 470-236-6548, the keywords, help me. And the best time to call you, and we will set up time to go over it with you. We'll talk about it over the phone, and we'll probably be able to do it from your home and from my home. You just need your last paycheck stub, and we can go over that information. I'm more than happy to work with you to make that happen for you. Again, my number is 470-236-6548, and the keyword is help me, and I'll get back in touch with you, and we'll talk about the details. The second announcement I want to make is that I have a passion towards reaching out to help educate and empower others because of how my wife and I have been blessed in our lives. But the most important thing is that we've both been plugged into a personal financial success system with some millionaires who've accomplished what we have been talking about. Now, because of that, we're going to start a 30 for 30 financial challenge campaign where we're going to help 30 families in 30 days start their journey towards financial freedom and abundance. We will be incorporating the various strategies on leveraging your income to accomplish your personal financial goals. Another term that you may not have heard of is called income shifting, or shifting your income. Now, if that's you, you need to text me 30 for 30, 30 FOR 30 at 470-236-6548. That's 470-236-6548. And the best time to call you, and I will speak to you concerning the details and getting started. Now, the third announcement I want to make is that for anyone who likes educating and empowering others and is interested in getting compensated for doing so, you need to text me the words "me too" at the number 470-236-6548. Again, the number is 470-236-6548, and the best time to call you, and we can discuss the details. So again, I've given you three options, and I hope one of them fits you. If so, you got my number, you got the information to send me, text me, and again, I promise I will personally get back with you in within 24 to 48 hours, and we'll be able to move forward as to whatever your need is. Now, In closing, I want to say that I want to thank you for taking time out of your busy schedule to watch this W-4 training video. I will be posting this video on my YouTube channel. So if you want to look at it again, you can. Or if you can refer my training video to others who you feel might benefit from this information, I would certainly appreciate it. Once again, this is Al Parker, Executive Vice President of myEcon, and I'm wishing you a better than amazing day. Bye-bye.